Welcome, Auvorians, to the midweek special strategy session called the Christmas version. Merry Christmas, happy holidays to everybody. Let's do a quick sound check, please. Q&A window is open. Let's put the Q&A in the Q&A window. Chat room is open. Make sure to post to all panelists. Welcome, everybody. I know for some of our new subscribers that have had a hell of a week trading Arrow, gotta love it. I recommend everybody well into diversification mode, which is really the truest reduction of risk. Take a look at it. It's done great. Hats off to Nathan. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin utilizing leverage can carry an even higher level of risk that lead to complete loss of investment funds. So before deciding to trade the foreign exchange markets using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, risk tolerance. Most importantly, can you afford to lose the money? Haven't gotten any emails in about a week, which tells me that hopefully the risk management is catching on. And granted, the next 2 weeks are holiday weeks. I have not been actively trading a lot almost the last month since the election. It's just too much stuff going on. I know that some accounts have gotten caught in drawdown, and frankly, I just wanted to stay away from it, as many of you already know. If you're sharing any of your results using our software tools only allowed in the Facebook groups, please do not use the term company recommended settings. AP doesn't have any recommended settings. We're not a financial advisory firm. We're not a brokerage firm. We can't see inside your brokerage account. We can't make recommendations to brokers. There are a bunch of good ones out there, but a lot of them are crap. So do your homework. Some software does come with out of the box settings. You have the ability to customize those. We essentially at AP, we license software that you can use however you wish. Settings can be adjusted at your own risk. Any settings I'm sharing are mine or the developers, so I recommend all of the developers who are all having calls, and all these calls are really good, and I'm forwarding a lot of their notes on Telegram. Obviously, make sure you are subscribed at the very minimum to all of the Telegram channels for the groups that you are in. So let's switch over to Forex Factory Calendar. Hopefully you guys can see that. Let me double check that I am sharing the right screen. So there we go. Forex Factory, nothing going on this week, holiday week. I don't know what else to say. Do keep in mind, if you're looking at next week, we can move to the 27th of December. It's essentially the Sunday post Christmas, from Friday all the way. Again, all kinds of stuff next week. Nothing really on the map. Now, what is causing some riff, if you will, in the US dollar, and I'll go to the charts next, is just the fact that if you hadn't heard the news, a really rotten bailout package that is loaded with pork and crap has been signed in. And unfortunately, a lot of the other countries that are being helped out, with the exception of the US population, which is quite sad. So that is the story on the calendar front. Let's go to the markets as a whole, looking at gold here. S&P still holding the highs. Let's focus on the dollar. 90. The big volatile moves here, looking at the daily chart, tradingview.com on the dollar DXY. Notice that, let's see if I can make this larger. See this dotted line here, just right above, just almost perfectly at the 91 area. You can sort of set it somewhere in the middle. Notice how when we came up on a crazy day that we had yesterday in the dollar, a lot of this was due to this bailout package, guys, the volatility in it. Notice it came back up and tested, which arguably should be a resistance line drawn right here, right? So we could certainly go in and draw a line. Let's use our holiday green here. Came right back up, and you can even move this down a little bit. There you go. Almost perfectly tested the high. This is a great example of if somebody's looking and they're just trading, manually trading up against what at least appears to be a very short-term resistance point. It's a good place to take a short. So really just looking to show you guys different candle patterns. You can get exposure to this. Don't want to do too much of a deep dive on this. It is a holiday week. A lot of people got other things on their minds, but I think it's at least worth a review real quickly of the DXY and what's going on. Now we're rolling back up against that. I don't think this is any more today of what's called a sell the news event, right? We were anticipating it. It is a devaluing thing for the US dollar. It is a devaluing thing for pretty much any country that continues to spend and add debt to the books. So, and that is a core fundamental of macroeconomic or microeconomic analysis. So looking at the movements in the dollar, what does this mean for traders? The accounts that have been trading USD have been a little more wild. So it's just another example of why I think it's important to listen to the developers, because they're going to be looking towards trading currency pairs that have win rates that are above 70% and have less volatility related to that. So something like the Euro USD, you could see that we've had, and if I stretch this out a little bit, see if I can bring this in, so you could sort of see the magnitude of the move just in the last 2 days. So we've almost put in what's called an inside day, which is just a pattern where your candle's trading inside the previous whatever's range, right? So essentially 2 candle previous. Nothing like an engulfer, which would have been quite bearish actually for Euro USD. But so far, just trading inside that range seems to want, just like the DXY, it's almost an inversion of that, or a completely reverse correlated looking chart. We've had some support lines down here, bouncing off it. So with the more volatility that we've experienced, the wilder these candles and the broader these wicks look on any chart, I don't care what you're trading, is really one of the reasons that, regardless of how good one's algo is trading whatever, the more volatility, the less the win rate. It's that simple. So, it's just simple risk analysis from a risk management standpoint, which is primarily my role. So, and that's why I've had, at least in the Forex accounts, a pretty decent year. A lot of the volatility early on in May, I didn't trade. It's probably just dumb luck on my part, because in the next week it whipped around my account a little bit as well. But just trading some of the newer types of algos coming out with conservative settings and nothing really crazy till we can get some of this stuff straightened out. Bailouts, elections, viruses. Now, potentially, the markets are getting a whiff that there's some sort of mutated version rolling through the UK that there's no vaccine for. So that's sending, again, just more reasons, at least in my opinion, to just be not trading it as frequently. So that actually argues quite well for, if you want to keep your finger on the pulse and not let these systems trade for you, or just throw you trade requests or trade notifications that you don't really know what's going on, this totally argues for being in something that's more manual like Arrow. So just keep that in mind. Where you can control what's going on, a number of very specific types of parameters in order to take the trade. Yes, you do have to spend some time in front of the screens, but with something like that, it's actually done very well, and you are truly in control of what's going on if you do want to trade volatile times. All right, so let's take a look at the GBP. Let me shrink this back down so we can get a feel for what's going on. So this, I could talk ad nauseum about what I think is going to happen. We're going to stay inside of this range, but at any time, Brexit news could break. It could take us out of that, right? So just more volatility on that. Not going to spend a lot of time analyzing that. Euro JPY, same thing. Whole bunch of dojis printing, probably looking for some sort of big move. but right now the dollar's leading the market around, and everything that's trading off that what's called pin action. It's kind of like a bowling ball hitting the main pin. That's your main or event, if you will, and then you have a series of ancillary events or tertiary level events that are affected by that wave. It's called pin action. USD/JPY, again, really paying attention quite nicely to my lines. Let's save that. Okay, so USD CAD. Now, a little bit of a reversal off of a pretty big area, as I pointed out on the weekly and monthly charts. Now, we'd have to go all the way back to 18, as many of you may recall. Seeing a pretty solid support line right in this area. So we bounced off that. But this is really just a reaction to some of the strength we saw in DXY, which is more of a, if you're looking at the daily on DXY here, this was just let's see if I can bring this into just a reaction off of what took place there. Let's see what else we want to talk about in CAD. That's pretty much it. I'm going to have just a generic chat today and really have one thing I would really recommend if you guys, let's see if I can bring this into focus here. There we go. So if you guys can see this screen, this is my market watch with your ugly faced dude, truly Steve-O. In terms of the just education of what I hope to be all subscribers of Auvoria at some point from a macroeconomic standpoint, I put in a blog that myself and probably about 50 of my closest traders / colleagues follow. This is Wyra Harris's Notes from the Underground. This guy is a CME member, has been for a long time. He is super well connected, and his blog talks extensively about what's going on with dollar, central banks. I mean, you've heard me echo some of this. Some of his stuff's so good. I'll read it, make notes of it, and have a comment on a couple of paragraphs because he brings up some good points for you guys. So, I try not to live as a risk manager in a vacuum. I really try to just, listen to all points of reference. That way I can bring you a more broad feeling for what's going on. So this particular one was really good. In addition to that, I think it's, I always forward everything from all the developers, obviously, and software switching. But I thought this was good. So this kind of goes along with really anything. It does dovetail quite well with Arrow, just understanding reversal patterns. It's really essentially just stopping or a continuation of a particular pattern, then what you call bilateral patterns or upside down flags, descending or ascending triangles. Stuff is really good. Just keep in mind, you're going to be looking for these patterns on higher time frames. So if something like this is building on, if you're trading like an arrow on a 15, 60 to 40 minute chart, something like this on a broader time frame, like a daily chart, is going to hold more water. So you always, even though you're trading on smaller time frames, you always want to pay attention with whatever you're trading, currencies, equities, what have you. Always pay attention to the bigger time frame patterns, especially if it's a inverse head and shoulders here. This is a big one, and there's the inverse of that. Okay, so rising and falling. You're just being able to recognize this. You don't necessarily have to pick them all out. But when I was first learning technical analysis, I printed out these popular ones, and there's like 25 other ones that go along with it, including shooting stars, hanging mans, all kinds of crazy names for this stuff. You don't have to have them all memorized, but I think, again, just helps you reduce the risk in the knowledge that understanding what's going on. You may not be able to predict it, and that's not what's important, but being able to recognize a particular pattern building out. So that's really all I have, guys. Just keep spreading the word of these calls. Make sure everybody in your up and down lines attending them. I can tell you very simply, the single biggest reason we have seen people not be successful in this is that they'll set up the software and then they'll just completely forget about it. And that's just not smart. We're going to be changing pairs around here and there and or settings. Obviously, I've been squawking all year about having the settings on conservative levels. That's just because I want everybody to come in, make money, maybe not a ton of money, obviously, but you can always offset that with something like an arrow. So, I mean, you literally can come in with arrow and set it up on a small amount and build the account up from $100. That's just bananas. I mean, you can't even enter the equity markets or the futures markets or anything in commodities with that kind of level of start. So, spread the word on that. You can come in, spend some time, build the account up to, $500, a couple of grand, and then diversify out into a different piece of software, a different EA, have a different algo trading another piece. Once those accounts build up, break it off again, and have, 2 or 3 pieces of software. It's great. So it just all helps. One's doing well, one may not. One may be flat for a particular week. One may be in drawdown that's climbing out. So it just gives you a better chance. It's nothing different really than from a risk management standpoint, owning a stock, right? You're not just going to go into the account and own a Zoom, right? You're not going to own a Terex. You're going to be more diversified in a group or an exchange traded fund to give you exposure to a particular area, a particular sector, right? So a lot of people in equities land don't even really mess around with them. They'll just buy the spiders, right? 500 largest capitalized stocks in an ETF. Same thing. It's just diversification. So it can be the same in currency land. So even though you can have a particular you're trading a particular currency and maybe you're just watching, 1 or 2 or 3 pairs trading arrow. Outside of that, you do have some diversification, obviously in currency pairs, but you want additional diversification in the actual strategy that's played out. So maybe have a martingale strategy trading some of your capital, right? Or something different. So no other questions. I wish everybody a Merry Christmas. I am available today via email, but tomorrow we take off for 5 days for skiing. So if anybody's got any questions on that, I'll be in Lake Tahoe. I'll get your emails back next week. Happy holidays.